Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. I recently did a video on how big 2022 could be for Tesla. On the Q2 earnings call, Elon said to expect at least 50% growth in 2022, but possibly even 100% growth too. Like I said, the video I made was how big Tesla could be. It wasn't a price target or anything. I generally don't make price targets. All I do is extrapolate all the information we have and are told and plug those numbers in to extract sales, revenue and profit as close as I possibly can. I don't do numbers based on what I think or feel might happen, as then it's completely arbitrary. I don't see the point of making up numbers just because they feel right. I like to do numbers based on scenarios and events, such as, if Tesla are able to achieve this, then the company should make this much profit. From there, it's up to you to use your own judgment as to how likely these scenarios might take place. For example, I've done estimates in the past as to what Tesla would be worth next year if they achieved 100 gigawatt hours of 4680 batteries in-house, as this is what we were told on Battery Day to expect in 2022. But now we've basically been told that this doesn't look likely to happen next year. But then we have other information, such as Tesla expect to have twice as many batteries from their suppliers next year as they will receive in 2021. Therefore, I would like to do a bear case scenario as to what Tesla might earn next year if they only hit 50% growth in vehicles in 2022. But whilst bearing in mind, they will still have twice as many batteries, which could be deployed into energy if they have bottlenecks in auto manufacturing. The bear case then would likely be more to do with Tesla having component shortages and unable to grow as fast as they could potentially ramp up otherwise. Remember, manufacturing is like a chain, only as strong as its weakest link. But if this is the reason for only 50% growth, then the point is, Tesla still have all these batteries they can deploy into energy. Of Tesla's battery suppliers, it would seem that CATL are the ones growing at the fastest rate, so a lot of these additional batteries will be CATL's LFP batteries. Now, these are the batteries that will be used in the standard range versions of their cars. Bear in mind, Elon said on the Q2 earnings call that they have a backup for Texas and Berlin lines with 2170 batteries. 2170, not LFP, implying that Tesla are only going to be making the long range and performance version at these new factories. Therefore, these additional CATL LFP batteries will not go into standard range versions there. It's also being reported that Tesla may also buy BYD's LFP blade batteries too. Tesla still does have extra capacity for the standard range Model Y in Shanghai, likely still to increase at least double, and Fremont is at maximum capacity for the standard range for the Model 3, and there is no standard range Model Y at Fremont. So in the scheme of things, it won't take relatively more batteries to be at full capacity for the Model Y Shanghai, implying the excess LFP batteries can go into energy for battery storage. However, we were told something about battery storage when it comes to Powerwalls. One was that Tesla has enough demand for 1 million Powerwalls, and another that they also use the same chips as cars. Therefore, it is better to sell a car over a Powerwall, as they bring significantly more profit to the company. Elon also said that they could actually make 1 million Powerwalls next year, which is huge. So these are somewhat contradictory. We're hearing that if there are enough microchips, then the batteries will be used for the cars and the Powerwalls, but if there are not, then fewer Powerwalls will be sold as they're needed for cars. But then if growth is 50%, not 100%, then that is significant, given we supposedly have enough chips for 1 million Powerwalls. Do you see what I'm trying to infer from what Elon is saying here? He said we could have 100% growth and 1 million Powerwalls. So in this scenario, we have enough chips not just for 100% growth for the cars, but 1 million Powerwalls as well, which sounds like a rather large buffer for chips. But if we only have enough microchips for 50% growth for cars, then likely a lot of those potential Powerwall sales will have to be sacrificed, as it makes sense to sell a car over a battery. Yet Tesla will still have leftover batteries, and as I explained before, these batteries could quite likely be LFP batteries, which means they'll be ideal for megapacks. Like I said, this is a little contradictory, but we will try and infer the best we can and deduce a potential bear 2022 case, based on Elon saying that this is at least what we should do in 2022, and not based on anything else that could potentially go wrong. And yes, some of the component shortages can be all sorts of things, but semiconductors are likely going to be the hardest component to ramp up significantly. Just a side note regarding the previous 2022 estimate, some of the feedback I received from some of you thought that the production numbers did look a little conservative, and to be honest, I'm inclined to agree somewhat. I think it's due to only seeing under 600,000 deliveries from Texas and Berlin combined in 2022, which doesn't feel like a lot given their capacity. But I try not to speculate as to what I feel might be the right number. I just try and do the math for scenarios. So who knows, maybe it could be well over 100% next year. And just to warn you, those with Cybertruck reservations hoping for your delivery next year, well, I have a feeling this scenario may not be what you want to see. Okay, we spent a bit of time explaining this scenario and how it plays out, so let's get to the numbers. It will be somewhat based on what we did calculate from the previous 2022 numbers, so I'll save you the time of repeating myself at how we arrived at some of the numbers. But if you haven't watched the previous video, I will leave a link in the comments below. I will also leave a link for you to download the spreadsheet. So let's get to the numbers. Well, we're working with 50% growth from this year. So first we need to decide on 50% of what. My target for this year is 900,000. If it's not that, then I can't see it differing by too much. For those of you who are thinking mid-800s, then personally, I think you're underestimating the remaining Model Y ramp from Fremont and Shanghai. 50% of 900 is 450,000 vehicles, or a total of 1.35 million for the year. Yeah, already that does sound unbelievably low, so I really hope we're not down that much. I don't think it's likely, but these are the numbers Elon said. Now, in the previous model, I had 1.2 million cars from Fremont and Shanghai combined, as it really looks like this is how they're ramping up. But I do have Model Y Shanghai at 50% above capacity, and it's also possible that Model X and S may not have ramped up so much. Although I would say Model S and X would get priority over any components, as they carry the most profit per vehicle with the highest average selling price, and most likely the higher profit margin too. But we could reduce that from 120,000 on the previous estimate to 100,000, as we've not heard much about the Model X yet, and we could take Model Y Shanghai down to its actual ledger capacity, which is a total of 1.1 million from Shanghai and Fremont for 2022. Leaving, I'm afraid to say, just 250,000 for Texas and Berlin combined. Again, I'm going to split them in half at 125,000 each. I mean, this really does feel unbelievable, but we'll work through it and see what the stock price could come to through it all. Worst case scenario, these supply issues will be temporary, whilst at the same time this is not halting battery ramping, so when the components are sorted, it shouldn't have affected ramping too significantly, but could mean a potential buying opportunity still coming up. Or maybe I won't exercise my leaps and will simply buy the shares cheaper than the strike price. Okay, I would be down about $50,000 on my leaps for 2022, but I was prepared for that. It was an asymmetric investment. And as you can see, we only have 25,000 Cybertrucks. But if you're one of the lucky 25,000 owners, then there's probably a chance you could resell at a significant profit. Unlikely you'd probably want to though. But you could always rent it out on something like Turo.com and probably see some decent income from that. My point being, this will be a scarce, valuable car. Now, I've adjusted the average selling price for Model Ys in Fremont, Texas and Berlin too. I increased it by $4,000 as I removed any standard range sales. At this low-level quantity of production, I can't see Tesla needing to launch a standard range Y for these factories, and we were told they were using 2170 batteries as backup. Although it's a bear case, I still want to be realistic in how Tesla would function, rather than just putting the lowest possible numbers in. I've also done something similar for the Model S and X by reducing the long-range sales for the Model X in lieu of more plaid sales, if we see more limited production on those models next year. I don't see much reason to edit the FSD adoption rate or price. It's very small in the scheme of things anyway. But we're at $75 billion of revenue, including regulatory credits, and I've annualized Q2 to compare everything with too. Now, this next bit might sting a little. I'm taking profit margin down to 25%. This is the sort of margin we saw when Model 3 was ramping up in Shanghai and Model Y ramping up in Fremont. If we're dealing with numbers this low in the new factories, then we're at something ridiculous like 5% of full capacity. Obviously, the more Tesla can ramp up, then the better economies of scale of the manufacturing. Now, bear in mind, I'm just copying 25% from this time of their ramping up in 2020. But these new factories are significantly larger, so it is possible this number could be lower, but I don't want to try and guess. And these cars should have higher margin anyway. But really, the entire year at about 5% capacity for the new factories, I mean, this does feel a bit ridiculous. Now we have all these excess batteries. If Tesla had about 70 gigawatt hours this year, and they're expecting twice as much next year, then that's obviously an extra 70 gigawatt hours. But this was just from their suppliers. We might also expect perhaps a further 30 gigawatt hours from their in-house 4680 batteries too. So we have a total of 100 extra gigawatt hours of batteries, but only an extra 450,000 cars, which could be around 30 gigawatt hours more battery consumption, leaving 70 gigawatt hours of excess battery. We will assign that much extra into energy, although it can't all be used to meet that Powerwall demand, as in this scenario we're short on microchips, so we will assign it to megapacks. When you plug that excess battery into Tesla's Megapack website, then we actually get $17.5 billion. And that is extra from 2021, which we have at $3 billion from Q2 annualized, giving us energy revenue of $20.5 billion. Of course, this energy will cost significantly more, but we are assuming that this is mainly LFP batteries due to limited supply of cars and only selling the long-range and performance models for Y, except from Shanghai. I'm assigning $16 billion for cost here. Now, this is somewhat of a guess, but LFP batteries are going to be a lot cheaper. I've also reduced selling, general and admin by $1 billion compared to our previous 2022 estimate, due to the fact we have 25% fewer cars in this scenario. I'm going to leave everything else as it was in the last estimate. This still gives us a total earnings of $13 billion, well over double from our Q2 number. A PE ratio would be difficult to predict on the psychology of the market, as Tesla's growth was so disappointing and their new factories are not doing what we hoped. Yet, on the other hand, it's still 50% growth year over year on car deliveries and over 100% growth on earnings, and there's obviously still so much more capacity left for ramping up. Also, we're talking about what the stock price will be at the end of the year. These are the totals for the year. At the end of the year, we would have had Q4 2022 reports. Well, slightly after the end, but close enough. Q4 could likely be annualized as much as twice this average, at least I would hope. In other words, if I placed a PE ratio of 100 for the trailing 12 months, then Q4 would have a forward PE ratio of 50, which seems ridiculously low. Therefore, I'm going to say a PE of 125. This is the value I think the market might place, not what I think it should be. Just remember, these numbers may look good on paper to you and me now, but it's a lot different when they're presented in a headline full of FUD from CNBC, and the market reacts emotionally to the likes of that instead. Anyway, PE 125 is still a stock price of $1,500, which is up over double from the time of this video. The number I'm least confident about is the energy cost, but if I raise that $2 billion more, then we still have a stock price of $1,300. Remember, this is also with low margins and 5% capacity of Tesla's new factories, or 25% total capacity. Still a long way to go. Well, if this case does play out, rather than use the money I hope to have saved by this stage to exercise my call options, well, they're probably worthless anyway, but I would instead double or triple down on more options instead and work out how to pay for them some other time in the future. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.